Most traders do not lose money because Forex is impossible. They lose because they keep making the same mistakes over and over again. And they do not even notice it. At first, they blame the strategy. Then, they blame the broker. Then, they blame the market. But the real problem is usually this. They do not understand how a strategy works over time. When it works, when it fails, and how their own behavior destroys the results before the strategy even has a chance. Let me show you exactly what I mean. The first big mistake is judging a strategy too early. Imagine you learn a trading strategy today. It says, enter here, stop loss here, take profit here. It looks so simple that you think money should start coming in immediately. So, you take 3 trades. You lost 2. Now, you say, this strategy is fake. But that is not how trading works. A strategy is not judged by 3 trades. It is judged over many trades. That is because even a good strategy can lose several times in a row. That is normal. A trader who does not understand this will keep abandoning good strategies too early because they had a small losing streak. That is like planting maize today and digging it up tomorrow because it has not grown yet. The seed is not the problem. Your impatience is the problem. Let me tell you why a strategy can work and still lose. And this is one of the most important things beginners never learn. A good strategy can still lose money on individual trades. Why? Because trading is about probabilities, not certainty. A strategy is not magic. It is not saying this trade must win. It is saying if you follow this repeatedly under the right conditions, it gives you an edge over time. That means some trades will lose. Even a strong strategy can lose 3, 4, or even 7 times in a row sometimes. That does not automatically mean that the system is bad. It may just mean, number 1, the sample is too small, or number 2, the market is in the wrong condition, or number 3, the trader entered at the wrong time, or number 4, the trader changed the rules, or number 5, the setup was not followed properly. This is why people keep falling. They expect every trade to be a winner. Trading does not work like that. Now, let us go deeper. Let me tell you why strategies fail sometimes. A strategy can work well in one market condition and fail in another. Let me give you an example now. For example, a breakout strategy may work well when the market is moving strongly, but in a slow market, price may break out, trap traders, and come right back. Then the trader says this strategy no longer works. No, the strategy may still be valid, but it was used in the wrong environment. That is like wearing a raincoat in the desert and complain that you are still hot. The problem is not the raincoat. The problem is the environment. This is why experienced traders always ask, number 1, is the market trending? Number 2, is the market ranging? Number 3, is there news coming? Number 4, is volatility high or low? Number 5, is this setup suitable for this type of market? Beginners usually do not ask these questions. They just see a pattern and enter. Let me tell you why most people lose even when the setup is correct. Even when the setup is good, many traders still lose because they do not understand or follow the rules. This is where emotions destroy everything. You see a valid setup, you enter. The trade goes a little against you. Now fear enters. You widen your stop loss. Then it moves a little in your favor and you close too early because you are scared to lose the profit. Then the next trade comes, but now you hesitate. Then you skip a good setup. Then later you chase a random trade because you feel like you are missing out. At that point, you are no longer trading the strategy. You are trading fear, greed, and confusion. That is why many traders never get consistent results. Not because the strategy is useless, but because they keep chasing the strategy with their emotions. Let me give you another reason. Another reason traders lose money is that they judge too fast. They test a strategy for 5 trades, 10 trades, sometimes even less. Then they make a final decision. But that is not enough data. 10 trades can lie to you. A strategy may look bad in a small sample and still be profitable over a larger one. This is why professional traders think in terms of sample size, not feelings. They want enough trades to see the real picture. Beginners do not like waiting. They want instant proof. But trading does not reveal its truth quickly. You need enough time, enough trades, and enough consistency to see whether the method has an edge. The second major mistake is changing rules too often. This is another killer. A trader learns a strategy and then starts modifying it immediately. Maybe they move the stop loss, or they change the entry, or they adjust the take profits, or they will add another indicator, or they will remove a filter. Trade at different time, or even enter before confirmation. They call it improving the strategy, but often they are just breaking the system. A strategy only works properly when you test it properly. If you change the rules in every few trades, then you are no longer testing one strategy, you are testing a mixture of ideas, and then you cannot know what is actually working. This is why many traders keep restarting. They never give one system enough time to prove itself. Let me tell you about overtrading, one of the fastest ways to lose money. A lot of traders lose money because they trade too much. Not because they have too many good setups, but because they cannot sit still. They are bored, they want action, they want the market to entertain them. So they take random trades that were never part of the plan. That is how small losses become big losses. More trades do not always mean more profits. Sometimes more trades just mean more mistakes. Professional traders are patient. They wait for clean setups. They are not trying to trade every candle. Beginners, on the other hand, often trade because they are emotional, not because the setup is strong. That is a huge difference. Let me tell you why small accounts die fast. Now, let us talk about money. Someone deposits $50 or $100 and immediately start thinking like they should turn it into $5,000 quickly. That pressure destroys them. Why? Because once they imagine a huge return, they stop trading logically. They start forcing entries. They start using large loss sizes. They start risking too much. They start ignoring stop loss. They start trying to recover losses quickly. And once they do that, one bad trade can wipe out the account. The account was not killed by the market. It was killed by unrealistic expectations. A small account does not need miracles. It needs survival, discipline, and time. The next thing I would like to tell you is this. Leverage is not the real problem. People often blame leverage, but leverage is not the real enemy. Leverage is just power. Power in the hands of discipline can be useful, but power in the hands of emotion becomes dangerous. Leverage does not blow accounts by itself. Poor decisions blow accounts. If you use huge leverage with no risk control, then yes, your account can disappear very fast. But even low leverage can still fail if the trader is reckless enough. So the real issue is not leverage. The real issue is lack of control. This is the circle many traders go through. They make a little money, they feel smart. They increase risk, they get overconfident. Then they lose badly. Then they panic. Then they search for a new strategy. Then they repeat the same process again. That cycle can continue for years. And every time they blame something different. 1 week, it is the broker. Another week, it is the strategy. Another week, it is the news. Another week, it is the signal provider. But the real issue is often the trader's pattern of behavior. They do not stay consistent long enough to build results. Let me tell you the reason winning traders survive. Winning traders are not perfect. They still lost trades. The difference is that they understand the game better. They know that number one loss is not the end. Number two, a strategy can have losing streaks. Number three, emotions must be controlled. Number four, risk must stay small. Number five, consistency matters more than excitement. Number six, the right market conditions matters. And number seven, patience is part of the job. They do not try to predict everything. They manage uncertainty. That is what makes them survive. Let me tell you how to reduce losses. If you want fewer losses and better results, do this. Number 1, trade one strategy long enough to understand it. Number 2, do not change the rules. Number 3, take only clean setups. Number 4, do not trade out of boredom. Number 5, risk small accounts. Number 6, keep your stop loss fixed or bearable. Number 7, do not move it because of fear. Number 8, use a risk to reward ratio that makes sense, like 1:2, 1:3, or 1:4 maximum, but it largely depends on your strategy, not your own choice or greed. Number 9, do not expect every trade to win. Number 10, track your trades in a journal so that you know what works and what does not. And most importantly, number 11, learn the market conditions where your strategy performs the best. A strategy that works in one environment may fail in another. This is not failure, that is information. Let me give you my personal advice. Trading is not just about finding a good strategy. It is about, number 1, using the right strategy at the right time. Number 2, following the rules properly. Number 3, surviving losses. Number 4, avoiding emotional decisions. Number 5, respecting probabilities. Number 6, being patient long enough to let the edge show itself. Most people quit before they ever give the strategy a real chance. That is why they keep losing money. Not because trading has no opportunity, but because they never stay disciplined long enough to capture it. So, if you have been losing money in Forex, do not just ask, what strategy should I use? Ask yourself these 6 questions. Number 1, am I using the strategy correctly? Number 2, am I trading the right market condition? Number 3, am I changing the rules out of fear? Number 4, am I over trading? Number 5, am I risking too much? Number 6, am I expecting too much too soon? Because until you fix those things, even a good strategy can keep failing in your hands. And that is why most traders keep losing money. If you want a clear and complete step-by-step process to learn Forex trading from beginner to pro level, I will leave a link to a recommended course titled Learn Forex Trading Properly. Get the course and start applying what you have learned in this video. And I will see you in the next video. Don't forget to subscribe to this channel and share this video to your friends and loved ones. See you in the next video showing on the screen.